Hello and welcome back to World Traders Paradise. I'm Frank White. Today we are talking about the one thing that will save your trading account from complete and total destruction. No, it is not a secret indicator. It is not a magic pattern. And it is definitely not that guy on Instagram showing off his Lamborghini telling you he made $1 million in a week. It is risk management. I know. Not as exciting as catching a 200 pip trade. But hear me out. Because this single topic is the difference between traders who are still trading 5 years from now and traders who are texting their friends, asking to borrow money. Let's get into it. Let me paint you a picture. Imagine you go to a casino, you sit down at the roulette table with 1,000 euros, and instead of placing small, careful bets, you put 500 euros on red. On the very first spin, red loses. You now have 500 euros left. So what do? You put 300 on red again to win it back. Red loses again. You have 200 euros left. You are frustrated. You are emotional. You put all 200 on red. Red loses. You go home with nothing. You tell your wife the ATM was broken. That is exactly what most Forex traders do. Except instead of a casino, they do it on MetaTrader. And instead of roulette, they call it trading. No risk management. No plan. Just hope and prayers. Here at World Traders Paradise, we do things differently. The foundation of all risk management is one simple rule. Never risk more than 1 to 2% of your account on any single trade. Let me show you what this means in real numbers. If your trading account is 1,000 euros, you risk a maximum of 10 to 20 euros per trade. If your account is 5,000 euros, you risk a maximum of 50 to 100 euros per trade. If your account is 10,000 euros, you risk a maximum of 100 to 200 euros per trade. Now I can already hear you saying, Frank, 10 euros per trade. That is nothing. I will never make real money risking 10 euros. And I understand that feeling completely. But here is the truth. A trader risking 1% per trade can lose 20 trades in a row and still have 80% of their account left. A trader risking 20% per trade loses everything in just 5 bad trades. Which trader do you think is still around to catch the big move when it comes? Think of risk management like this. You know how cockroaches survive everything? Nuclear explosions, floods. That one uncle who leaves the kitchen in a state for 3 days. Cockroaches survive because they are small, they are quick, and they never put everything in one place at one time. That is exactly what you want to be as a trader. Not the lion who goes all in on one big hunt and starves when it fails. Be the cockroach. Small, consistent bets. Survive everything. Always live to trade another day. I know nobody wants to be called a cockroach. But trust me, in trading the cockroach wins. Now let me show you exactly how to calculate how much to trade on each setup. This is called position sizing. And it takes about 30 seconds once you know the formula. Here is the formula. Risk amount divided by stop loss in pips equals your lot size. Let me use a real example from episode 3. On the dollar-yen trade, my entry was 161.726 and my stop loss was 161.618. That is 10.8 pips of risk. My account is 2,000 euros. I am risking 1%. That is 20 euros of risk. 20 euros divided by 10.8 pips equals approximately 0.18 lots. That means I trade 0.18 lots on that setup. No more, no less. Now here is the beautiful part. If the trade loses, I lose 20 euros. My account goes from 2,000 euros to 1,980 euros. That is uncomfortable, but it does not hurt me. I can take that trade again tomorrow. If the trade wins at 2-to-1 risk reward, I make 40 euros. My account goes from 2,000 to 2,040. Small, consistent, compounding over time. That is how real wealth is built in trading. Now let me show you something that genuinely surprised me when I first saw it. If you start with 2,000 euros and make just 2% per month, just 2% after 1 year, you have 2,539 euros. Not amazing, but consistent. Now if you make 5% per month, after 1 year you have 3,591 euros. But here is where it gets interesting. If you make 10% per month, after 1 year you have 6,277 euros. You have more than tripled your money. And with our 75 to 80% win rate on euro dollar and dollar yen, 10% per month is absolutely achievable with proper risk management. Compound interest is the eighth wonder of the world, and most traders ignore it completely because they are too busy chasing 100 pip trades and blowing their accounts. Let me give you my 3 personal risk management rules. Rules I follow on every single trade. No exceptions. Rule 1. Never risk more than 2% of my account on one trade. If I break this rule, I am not trading. I am gambling, and I can go to the casino for that and at least get a free drink. Rule 2. If I lose 3 trades in a row, I stop trading for the day. 3 losses in a row tells me something is wrong. Either the market conditions have changed, or my mindset is off, or both. Either way, the answer is the same. Close the laptop, go for a walk, come back tomorrow. Rule 3. Never move my stop loss to make a losing trade worse. This sounds obvious, but when you are sitting there watching a trade go against you, the temptation to move your stop loss further away is enormous. You tell yourself the market will turn around. It might, but if it does not, now you have lost twice as much as you planned. Stop loss is a promise you make to yourself before you enter. Keep it. Quick reminder about risk reward because this connects everything together. We always aim for minimum 2-to-1 risk reward on every trade. This means if we risk 20 euros, we target at least 40 euros reward. Now here is the magic of combining risk reward with our win rate. If we win 75% of trades at 2-to-1 risk reward, out of every 10 trades, we win 7 and lose 3. Winning trades, 7 wins times 40 euros equals 280 euros profit. Losing trades, 3 losses times 20 euros equals 60 euros loss. Net result, 220 euros profit from 10 trades. Even if our win rate drops to 60%, we are still profitable. 6 wins times 40 equals 240. 4 losses times 20 equals 80. Net 160 euros profit. Risk management plus a good strategy makes you profitable even when you are not winning every trade. That is the power of the system. Now let me talk about something nobody in the trading education world talks about enough. The psychological side of risk management. When you risk too much per trade, every trade becomes emotional. Your heart rate goes up when price moves against you. You check the chart every 5 minutes. You cannot sleep. You cancel plans with friends because you need to watch the chart. I have been there. It is not fun. Your family thinks you have lost your mind, and honestly, in that moment, they are right. But when you risk 1-2% per trade, something magical happens. You stop caring so much about each individual trade. You trust the process. You enter the trade, set your stop and target, and go and live your life. Price hits target. Great. Price hits stop. Fine. Next trade. That emotional detachment is not coldness, it is professionalism. It is what separates traders who last from traders who quit. So let me summarize what we covered today. 1. Never risk more than 1-2% per account per trade. 2. Use the position sizing formula. Risk amount divided by stop loss pips equals lot size. 3. Always aim for minimum 2-to-1 risk reward. 4. Stop trading after 3 consecutive losses. 5. Never move your stop loss to make a bad trade worse. 6. Trust the process and remove emotion from your trading. Follow these 6 rules alongside the engulfing candle strategy from episode 1, and you have a complete trading system that is built to last. Next week, episode 5. We are going deep into the RSI indicator. I'm going to show you exactly what those green and red spots on the chart mean, how RSI confirms your engulfing candle entries, and why adding RSI to your strategy can push your win rate even higher. That is one you absolutely cannot miss. Subscribe now, hit the bell, and share this video with anyone you know who is trading without a risk management plan. Because right now they are driving without a seatbelt, and they do not even know it. Stay disciplined. Stay patient. Paradise is just one good trade away. I am Frank White. See you in the next one. And do not forget, the future's past is our looking glass.